You can read more in step one about the things that will be covered in the weekly strategy sessions. It's always helpful to learn from experienced real estate investors who have done it before. Some of the strategies that we actually talk about, they were actually used by us in deals. So let's quickly look into a property that a member's invested in right now. Here's an overview of the deal. So it was an $83.5 million deal. It has about 1,100 units. It's 1,094 to be exact. So in the next few slides, you'll get an insider view into how we put these deals together. And obviously, in the weekly strategy sessions, we'll talk more about details as far as how do you find these deals, how do you source them, negotiation, financing, closing to operations, all those details. There are a lot of moving parts, and we'll cover all that in the weekly strategy sessions, which are held on Saturdays. So it's a very complicated business, but obviously it's lucrative, which is why we're doing it. Initially, obviously, you'll be starting off with duplexes, fourplexes, or even smaller apartment buildings, with 10, 20, 30 units. But it always helps to look at a bigger deal to get a better understanding. So the following few slides are taken from the PPM, which is the private placement memorandum, which holds the actual property. And so here's the first page. Obviously, the names have been grayed out for privacy purposes. So here's the first page that talks about how the units are broken down and what the purchase price is for each unit, much like you would with a stock. So it's sort of similar. Again, don't worry about every little detail right now. We're just trying to get a big picture view of how these things work. Here's an index and some of the very detailed and more complicated things that we'll cover later, such as the company, financing the property, the offering, the management of the company, how the compensation and fees work, how the distribution of dividends work, allocation of profit and losses, and what the standard risk factors are involved in real estate, how the debt financing works, how the capital would be used that we're raising, how the management of the company works, allocation of profit and losses, and so forth. So obviously, it's a very complicated document. We're only going to go over a few different things, and as again, the names have been grayed out for privacy purposes. So this is a snapshot of how the company was structured. So you have the borrowers, so there's a separate LLC for that, who the manager is, what the percentages are for the owners and the investors, how the mezz financing works. So, obviously there are a lot of, as you can see, a lot of different moving parts, and then obviously, we have an accountant that helps us, we have a lawyer that helps us put these things together. So you don't have to worry about all that right now. We're just looking at a big picture for the moment. So here's a snapshot which talks about the asset management fee, which talks about the acquisition fee. An acquisition fee is basically a fee that you take upon closing of the deal. So it might be whatever percentage, and it's something that is sort of a compensation that you get once the deal is closed. And then you have an asset management fee. I'm not going to go into too much detail about that right now. Let's see what else. And then here we have the estimated sources and use of proceeds. So just real quick. So the gross proceed offering, which was the equity portion, which is 18.5 million, and the debt portion is 65 million, which is the financing portion. And then here you have the uses of capital, such as the closing costs, your loan fees, much like you would on a home when you're closing it. You have your closing costs, your loan fees, and the renovation costs are the interior exterior rehab costs. You have the acquisition fee, which is added to that, the working capital for the operations, and of course the purchase price of the properties. This is a description of how the actual capital will be used. And obviously, once you start, you're obviously operating it and doing it, these numbers will not be exactly the same to the dollar. There will be fluctuations here and there, and so forth. So again, that will be discussed in more detail later on. Here's an example of a financial analysis base case that was conducted, which goes into the from year 1 through 5, what the expected rents will be collected, what the rents will be, what the growth rate will be for those rents as we execute our strategy of adding value to the property and boosting rents, what the expenses will be, and what the yields will be. So you have just a quick glance. We have the total revenue, we have the total expenses, and then the net operating income from that. and then obviously you have your debt service, and then your cash flow from years 1 through 5, and then you have your unlevered and levered yield. So obviously, we'll go into much more detail about how do you calculate these, how do you adjust for unknowns that may arise, and so forth. So all that will be covered in the weekly sessions. I just want to give you a glimpse into the things that we'll be discussing. Here's an example, an actual example of a check that was received. And obviously, this is a very small amount. It's just $2,000. But the point here is that we're in this business to receive passive income, to receive these cash flows month after month after month. So the goal is to grow these checks. So that was obviously one example of a check. And obviously, once you start receiving checks to the point where the monthly income makes sense for you, that's the goal. That's where we want to get to, right? So it's very important that these properties are cash flowing from day one. And so that was just an example of a check that arrives in the mail, and the goal is to have more checks like those coming in. So that was just a summary of one of the deals. So obviously every Saturday you'll learn a new aspect of this complicated business. There are obviously going to be private events, which will be held once a month, where you will get to partner up with one another. And obviously, we will lead the charge in that and go into more detail about that as we go along with the weekly strategy sessions. But in the meantime, you can look below. If you just scroll below, you'll be able to see more case studies of more details about a 288 unit property and a 1,094 unit property in a little more detail. And I hope that will help you understand a little more about how commercial real estate works.